Amid the Bank of Canada's latest interest rate hike, economists are predicting job losses for the upcoming year. This is according to a recent report by information service Finder, with a panel of 15 economists and industry experts. 73% of Finder experts anticipate widespread job losses in 2023 due to recessionary pressures. Yet Canada's labor market seems to be gaining momentum, with November seeing an additional 10,000 jobs. Now, this is on top of the massive 108,000 job gain from the previous month, according to Statistics Canada. South of our border, slightly more Americans filed for jobless claims last week, but the labor market remains one of the strongest parts of the U.S. economy. With concerns of an economic slowdown or possible recession looming, what do these conflicting numbers mean? Well, joining us now to help clarify it all is Brendan Caldwell, director at Caldwell Securities Ltd. Brendan, welcome back to Forum Daily.
Thank you, Nima.
So as we mentioned, jobless claims in the United States seem to be on the rise slightly, and there are job loss concerns for Canada as well. But all of this is not reflected in the job numbers, Brendan. So what does this mean?
Well, part of it is the way that Canada and the US measure job numbers, and they're both different, and I'm not going to go into that. I think the Canadian way is, well, better, but I do think that you're going to see turnover as different companies, different industries are do well or do poorly. But in general, I do think that you're going to see a pretty robust job market. In our own experience, it is challenging to hire people, and when one does hire people, there is wage pressure, and it's not just our industry in the investment business. I think it's right across the board. So if there's going to be a recession in 2023, this is not what a recession looks like, and I've lived through a few of them.
And on that note of wage pressure, so that's a good point there. Amid these rising prices, there are concerns around wage inflation. So just how apparent is this issue in Canada, and how does this play into the issue of job losses?
Well, one could say that as there's upwards wage pressure, employers are going to try and make do with less, or in the case of manufacturing, I think you and I talked about onshoring of jobs. They're going to find ways to automate, so they hire fewer people. This is all true, but, and this is a big but, that wages haven't gone up as much as inflation has, even as measured by the consumer price index. So where you've had, say, 5 and 6 and 7% wage increases, you're having 7, 8, and 9% inflation numbers over the last year. So at present, wage expectations have yet to catch up with the actual rate of inflation. That's saying nothing for the asset inflation that's been going on for years and years. So the prices of houses, prices of the stock market, and everything we've talked about. So I really do think that there's going to be continued upwards wage pressure. While that will cause some dislocation and substitution and automation, I do think it's about time, because real wages actually haven't gone up. But I think this nominal wage inflation is going to continue for a while, at least until wage expectations catch up with the actual inflation rate.
And another thing to consider amid all this, amid these concerns around job losses, I've heard you say that it's hard to hire good people. So what exactly are you seeing in your particular sector when it comes to this?
Well, what I meant was it's hard for other people to hire good people. We've already hired all the best people, so there's very few of them left for all the rest of the firms in our industry. I think that's what I must have meant, Nima.
Yes, definitely.
It is challenging to hire good people because one, I think our industry has maybe not communicated all the different and varied jobs that we can do. I mean, I think where we would like to hire people is in sales. And that is not something coming out of university that most people are attuned to, that there are these jobs in sales where you can actually go out, talk to people, and generate business. That job exists, and it's actually both very lucrative and ironically, the most secure job in our industry, because if you're good at actually connecting people or people with investments, you have a pretty good and secure job for a long time. So it is challenging to hire people, and it's also challenging to hire them at prices that, we're historically used to because of this wage pressure. There's a bit of sticker shock for employers right now.
Brendan Caldwell, always a great interview. Thank you again for joining us today on Forum Daily.
Thank you, Nima.
Stay with us. We'll be right back. And after the break, we're going to take a look at the state of the markets. We'll be joined by Catherine Murray, host of The Buck Stops Here. She's going to unpack the major moves this week and what she's been looking at in the world of finance. And of course, after that, we'll take a look at the major headlines and news stories from around the world. So stay tuned. Forum Daily will be back.